Hello, and welcome to today's Sifted Talk in partnership with Stripe. I'm Tom Matsuda, Sifted's fintech reporter, and I'm really excited to moderate this panel on embedded finance and how to build a payments powerhouse. During this talk, we're going to talk about some of the challenges and opportunities emerging as embedded finance becomes a standard part of digital platforms. We'll be talking about how to choose the right partner with embedded finance, how to unlock revenue and retention for these services, how you can go from an initial idea to full-on integration, and how to stay agile in the future in a kind of fast-changing embedded finance landscape as well. By the end, we hope to give you very practical insights on building an embedded finance powerhouse. Yes, but before we get into it, I want to introduce our amazing panelists. So today joining me, I have Lucile Cornet, partner at venture capital firm 8roads. Lucile focuses on fintech investments and is an investor into companies such as banking as a service provider Swan, and sits on the board of spend management fintech Spendesk. I also have Gordon Stuart, SVP of product operations, fintech and embedded services at Sage. Sage is an accounting, payroll, and HR software provider based in the UK that serves around 3 million UK customers, 3 million customers globally. Also joining me today, I have Laura Yates, Senior Account Executive at Stripe. Laura works in the platform team at Stripe, where she supports businesses to enable access to embedded payments and financial services. So we have a very qualified panel for what we're speaking about. And very much looking forward to hearing from everybody, but just to do a little bit of housekeeping before I start. There's a Q&A box at the bottom, which you should see here, right at the bottom, with a question mark in it. Please click that to kind of send in questions as and when we go, and we'll get to them when they're appropriate in the conversation. And please don't be shy. We want this to be as interactive as possible, and I'm looking forward to a lively discussion. Let's dive in and start with a little bit of context, I think. Maybe one for all of our panelists here. In a nutshell, what is embedded finance and why is it such a big deal for businesses right now? Lucile, maybe I can go to you first for that.
Yeah, hi Tom, hi everyone. Embedded finance, sometimes I think people find the concept quite abstract, and in the end it's relatively easy. It's really this idea of enabling any company that's not a fintech to offer financial services and embed them within their own product. We've seen it with consumer companies, and I always think Uber is probably like the easiest example where you really don't see the payment when you use Uber. And I think now we're in this age where it's going to the B2B side of things, and in particular in our portfolio companies, we see more and more software company embedding financial products. Oftentimes starts with payments, and I'm sure we'll talk about that today, but it could also be investing, lending, and many other products.
And I guess from an investor perspective, what makes so many companies kind of excited about embedding financial services into their platform?
Yeah, what's getting us really excited about this is really the idea that effectively software will eat fintech, if I paraphrase a little bit, but also that suddenly the number of things you can do as a software company if you're in charge of bank accounts and effectively seeing transactions in your product, it opens the door to way more automation and value add. And I'm sure we'll talk quickly about AI, but I think in this era of agentic workflows, obviously, it's pretty simple to imagine if payments are embedded in the ERP, or if payments are embedded within an operating software, a day-to-day software for, let's say, a hotel or a plumber. It's really easy to imagine then suddenly not only it's convenient, but also the software could start offering way more additional services, reconciliation, chasing people that haven't paid, offering financial insights. And so it's exciting because you make it more convenient, but it's even more exciting in the sense that suddenly you open the door to a lot more value add that you can offer.
And Gordon, I guess Sage is a great example of a platform that's added embedded financial services. What problems or opportunities were you looking to address by embedding those services with Sage's platform?
Yeah, no, it's a great question. And hello, everyone. It's a genuine pleasure to be able to add this into my day today to have a chat about this. So, I think there's kind of two real lenses from Sage's perspective why this is important. I think first and foremost, like our mission is to serve small and medium businesses. And actually, we've done a lot of research, and there's a lot of other research out there that if you're a brand new business, access to finance is normally available. There's plenty of schemes. If you're a very large business with a robust balance sheet, again, your access to finance and lending is probably going to be easier. But there is this squeezed group of customers in the middle who want to invest, but often find it challenging to be able to get that capital to invest in things that are going to move their business forward. Now we're in a really good position, being accounting financial management provider with ERP software in there as well, that we've got a lot of the data that sits behind, which can actually help make good lending decisions to know that a business is robust, and that it'll be able to fulfill its obligations from that perspective. So the first thing is we see this as an opportunity to really help our customers throughout all of these workflows, whether it is around getting payments into the business, making sure they're paying their suppliers out of the business. But this access to finance piece is critical because it helps grow those businesses and ultimately deliver, whether it's a florist or a mechanic or whoever it might be, to further their business. The second thing for us, of course, is it makes those customers sticky. If they're using more of our services, and they're more likely to stay with us as a platform, and they see that we're offering things beyond the kind of usual scope. And of course, the third piece is there's a revenue share element there, which helps us with kind of our financials in terms of how do we grow a business. But it's really that balance between serving customers' needs, which they might struggle to get in other places, and then really looking at how it fulfills our business ambitions as we've got to grow our business forward. So yeah, it's the mixture of those two elements which have made it very interesting, and our place in the market is a good place to then be able to realize that for customers.
And why did you decide to partner over, say, building all this kind of payment infrastructure in-house?
Yeah, so a really good question. So for those who followed Sage for a long time, especially in the UK, may know that we had a payments business in the past. So the Sage Pay brand, which is still out there in the UK, which is still well seen. And one of the challenges with owning a payments business is the regulation that comes with that. And if that's not the core part of your business, that is a significant overhead for a company of our size. So we kind of we strategized a couple of years ago in terms of our focus on accounting, financial management, payroll software. And as we then still saw that same opportunity we saw several years ago when we owned that business, finding the right partner who can be trusted, who is going to be able to deliver, who is going to be compliant, is one of the key pieces to offering that software and that service, within our software. But then also making sure that we partner with brands that our end customers trust as well. Trust is so important when there's any movement of money, as we know as consumers and businesses. If you trust the entities you're working with, the likelihood of you consuming those services is much higher. So choosing the right brands to work with is a key part of our strategy that's gone beyond where we used to own this as a business.
Thanks, Gordon. And we'll come to that kind of. Oh, go ahead, Laura.
Just on that, I think when we're talking about businesses that are looking to enter into the embedded payments or finance space, like Sage have obviously gone on that journey of changing the way that they have set up their payments business. But I think it's really important that anyone looking to start out in this particular area thinks about what their goals are in terms of when do they want to be live in market, how much time do they have to prepare for that launch, and things like what their end customers want from a user experience and what do their customers want from a user experience. So I think there's quite a lot of what in terms of when starting to think about this process, in terms of do you want to go to market as your own brand, or are you happy to go with that partner brand that Gordon just mentioned there and have that kind of security of someone that's known in the space. I think there's just a lot of things in there to discuss.
And Laura, what kind of questions, for companies that decide to partner for embedded payments, what questions should they be asking potential providers like Stripe before choosing a long-term partner?
Yeah, I think there's lots of different things about scalability, reliability in terms of the infrastructure and how that can grow with someone's business. So where you might start with payments. I think we're going to probably talk about this a little bit more, but you might start with payments and then you want to add financial services. So understanding how you can add those components and that modular approach to your business. I think having the payments as a starting point is key. It provides a lot of information and data into what you might want to do for your customers. But I think understanding how you can perhaps flex on that journey as you mature in this, and how you can maybe start leaning on a partner more heavily, and utilizing things like embedded solutions that are there already, UI that they might have built, and then progressing through to perhaps a full comprehensive API integration at a later date. So just really understanding what the developer experience is, what their scalability is, what their reliability is, and what other geographical kind of support they can give you from a geographical expansion perspective, but also from product expansion, and what else could they add to your portfolio, say in 5 years' time.
Gordon and Lucile, I see you both nodding.
Yeah, and maybe one thing I can add, because I think it's been, especially from our side as investors, it's been the forever question of embedded finance, like, do people grow out of this, right, and develop it in-house? And I thought it's so interesting to hear from Gordon, because even Sage, which is probably one, much larger than a lot of the startups and scale-ups we work with, you still made the choice to outsource this and take a partner. And I think people underestimate sometimes, the complexity that goes behind it. And so to the question around like choosing a partner, I think there's beauty in picking someone that's only going to focus on that, right? And so why would you, go through that? And why would you, get the regulatory approvals and, build knowledge in KYC, KYB, AML? There's much more nuance and subtleties that people might realize, especially as you go multi-country, multi-product, where, at least in my opinion, if it's not your core business, is it really the place where you want to build a 100-people team just to manage this? When obviously, if you pick someone whose only job is to do that, like these centers of excellence, especially, I'm thinking fraud and, KYB and what do you approve? And especially as you go to lending, right? These things are entire, people have built decades of expertise around those things, right? And so to me, at least, it sounds pretty obvious that it would be much better to almost use that product and engineering capacity to, develop another feature as opposed to build that in-house.
I think just to add to that as well, I think there's a couple of other considerations. So of course, in terms of finding the right technical approach is really important. Finding make sure a solution which works for your customers, and obviously the kind of long-term commercial agreements. I think it's also and Lucile will know this. It's also really understanding the profile of your business ownership structure. If you've got investors, what their appetite for the risk is, how they want to use the business's balance sheet. Because there's a lot of it comes down to that attitude to risk, and where you want to. Every business has to take risk to grow, but it's where you want to place that risk. And I think it's important really to understand the long-term view of your business and how you want to use that capital. And actually, if that's not balance sheet risk that you want to take from a lending perspective, finding a partner who wants to do that is the perfect way to have the best of both worlds. Still kind of drive this growth, but also honor the kind of structure of how you want to run your business financially.
And we have an audience question that kind of links neatly into this topic. Katie Babbage is asking, how do you each define embeddedness? I ask this because I've spoken to partners and they all seem to define this differently depending on where they are within the ecosystem. I know, Lucile, you already kind of gave a sort of definition before, so maybe Gordon, I could come to you.
Yeah, no, it's a really good and interesting question, and it's one that we discuss with our kind of architects and senior technical folk, because of course there is different levels of integration that you can do with different platforms. When I think of something being embedded, this is making sure that when it shows up in our software, it's not something you're jumping out into a different browser window. It's not something that's just a kind of pop up. It's something that looks native within our product, even if it's differently branded. So we're using a partner brand within there as well, and then it's really intuitive. So we've tried to ensure that all of our embedded capabilities that partners within our product, it looks and feels and it's very easy to use. Now, it feels like that's not a kind of hard and fast binary definition, but for me, it's all about the user experience, about how embedded or the embeddedness feels. And if it feels like it's part of your product natively, you've probably done a good job to getting on that embedded journey in a big way.
Laura and Lucile, is there anything that you would add to that? Anything you would agree with or
From
agree
my
with?
perspective, Connect is the solution that we utilize as a platform for embedded finance and financial services, embedded payments and financial services. We've come on quite a journey with that. I think Connect is now 13 years old, 14 years old maybe. And effectively what's happened is it used to be very segmented, that you started in one particular area and you would have to kind of keep with that choice that you made. So you want to pass off like risk to Stripe, and you want to allow them to do this to start with. If you started with that, you used to get stuck in that particular piece. We now have a much more flexible offering. So in terms of you can start with one and you can start to scale how much you'd want to take and adopt that yourself. So we have things like you can have fully Stripe hosted solutions. We have the concept of embedded components, which is effectively UI that can be embedded into your own dashboards within the Sage product, as an example, which effectively pre-built. So you don't have to build that UI. We've done that work for you, but you can turn those on and turn those off as and when you need. And then you can go to the fully API solution at the end, where you would just obviously encompass those APIs into your technology. So I think having that flexibility and being able to move across those particular things means that people can go to market with speed when they're ready to, and then they can start to adopt more of those responsibilities and capabilities as they build their team out further. And they can pass off risk to Stripe, and then if they wanted to build a 100-person risk team down the line, they could start to adopt that and kind of go through that process. So I think having that flexibility and having that modularity and I guess ability to embed things in different ways from a user interface perspective is really important.
Yeah, maybe to add to that, I think it's a very good point. I think it's more of a gradient, and typically people graduate, right? And they can go anywhere from like just having payments with a partner all the way to, I think as Gordon was describing, something extremely embedded. And typically what we see is people, further build and build as adoption improves in their own customer base. But the way I think about it in almost simplistic ways, the better is when it's completely transparent. So it's almost, the end user doesn't really think of it as a bank account specifically, right? Things just happen. And so, if I take this plumber example again, like, it goes in his dashboard for dispatch and team management, and then, invoices get paid, people get chased, things get reconciled, and of course, like, I don't think we're 100% there yet, and no one has done that, but that's really almost going back to the Uber example in the consumer land. You don't see payments at all, right? And I think that's probably where the B2B experience will also go, where maybe help with agentic workflows. A lot of things happen just in the background, right? Payroll gets approved and gets sent, right? So you can imagine in the expense side as well, like expense, as long as they're within the approval or budget, they can get approved. So you could also imagine a lot of the beauty is actually making it disappear to some extent.
Right. So the embeddedness comes from just not seeing it at all, right? Or not being aware, or the end user being
obfuscating the complexity of it.
Yeah. And I think just to add to that, I think that's a really important point in whether it's with consumers or businesses. Like with the Uber example, when you want to take a ride somewhere, it's a means to an end to get to your destination. You're not doing it because you want to go and sit in a car for 20 minutes to get into the city centre. And it's the same for businesses. When I speak to a lot of small and medium businesses, they don't go into business, and again, I'll use the same examples, as a mechanic, as a florist, whatever it might be, to run a business, to take payments, to chase payments. They go into business to fix cars and motorcycles. They go into the business to make beautiful floral displays for weddings. And I think as technologists, as much as we can do to take away and make a lot of this seamless in the background, actually it gets business owners back to what they originally want to do while they set up their business, which is genuinely their passion, or the thing they want to spend their time doing.
Amazing. All right. Thanks, Katie, for that question. I really appreciate it. Please keep them coming. This links quite neatly into what I want to talk about next. I really want to kind of dive into the business model behind embedded finance. Can someone on the panel maybe walk me through how platforms actually make money or drive kind of return on investment by embedding finance?
I can start. I think typically there's a revenue share, and Laura can comment specifically on the Stripe, but typically there's a revenue share from interchange and different revenues associated with transactions. And I think the important thing here is, in a way, which makes it funny when you're a provider of embedded finance, you're not really selling something that's going to cost. You're selling a new revenue opportunity to software companies, but equally can be hard because it's hard to quantify and hard to sometimes know, what adoption am I going to get, and obviously these things are gradual. So you almost need to project like what it could become a couple of years down the line and work backwards. But if I look at the US, like you have companies like ServiceTitan, like Toast, like Lightspeed, that have almost 80% of their revenue from payment flows. So you do have examples of extremely large outcomes just driven from financial products. And at least what I see sometimes in Europe is people think of it as a little upsell, and I think sometimes they misjudge how significant, because we could talk about 4 or 5 times your ACV in terms of uplift, obviously not from day one, and you obviously need to earn the right to do it, and probably offer additional services, as I said, like do you do reconciliation? But in terms of scale, it could be much larger than people imagine, because suddenly you're in the flow of payments. So you can add value, you can monetize the payments themselves, you can potentially get into lending because you have enough information. So you can get into investing, which is becoming also something interesting for small businesses. Like, could you get access to money market funds? So in effect, you're competing with banks, and you're taking away revenue from the banks. And that market, how large is SMB banking in Europe, is pretty big. So I think the revenue is potentially very large, but it's depending on how successful you as a software business can be to also generate it.
And Laura, what would you say are like the main components to consider when building a successful go-to-market strategy for an embedded finance offering?
I think you should always begin with a strong customer-centric approach. I think the key thing here is as a vertical SaaS business, you know your customers best, you know what their pain points are, and you know how to service that customer. Stripe's sort of go-to-market strategy with platforms is because they have the customer base within their software, and they know what they need. So I think in terms of that, understanding kind of how you would attract more people to your platform, how you would attract more people to your business, and then once they're there, how do you then enable them to utilize more of those embedded finance solutions that you would add on? So in terms of distribution of the products that you might offer them within there. So a basic example could be that, say, a vertical SaaS business onboards someone for online payments, but they're taking card payments with someone else, so in-person payments with someone else. So a basic POS solution could be an addition to that software business, where they're now offering an omnichannel solution, and they're capturing both of those payment flows within the business, and therefore they would then help the end customer speed up reconciliation at the end of the day, because they've got one particular system to use and things like that. So effectively, kind of how do you attract more businesses to your solution? One, for the SaaS revenue that you're going to then generate from the licenses that they're using, plus the payment revenue that you might make through a revenue share, and then additional services that you can add on, perhaps the loans and issued cards and other things that would come from that. So lots of different means to generate additional revenue from payments and finance.
And just to ask a question to open it up to everyone, how can a company ensure that integrating payments and financial services actually boosts metrics like revenue or user retention, and isn't just like a costly experiment, right? Because as we've said before, it's not their main business, right?
Yeah, it's a complex beast in terms of how should you price, how is interchange passed through, and what card are they going to use. So I would say, and Lucile's comment about revenue share, I think you can go all the way through to a buy rate and effectively get a buy rate and do all of that analysis in terms of how you're going to charge costs through to your users. The revenue share is an easier entry route into that, because you're protected through working with a partner in that base. I think you would need to think about who your customers are, what their expectations of payments are, where they're getting their payments from today, and what is going to sway them to move over to you as their software provider. and how would you utilize that market?
Yeah, I think just to add to that, Laura said it really well. It's knowing your customers, your customer's customer as well is really important to understanding whether this is going to be the right choice and how you go about it. How typically those end customers transact. Is it through an e-commerce store? Is it typically point of sale? Is it a pay on invoice? Is it cash? The industry you're in as well can have an impact on this. You know, if you look at the US kind of healthcare sector, the way that you know, insurance is typically pays for some of the, you know, the treatment that people might get. You know, that sometimes is a workflow that's harder to kind of get into. So I think understanding your market, which, you know, vertical SaaS companies will do very well, is going to be the key to knowing the opportunity. I think obviously depending on the country that you're in as well, you know, there's different sets of the way kind of interchange fees work, the way that, you know, bank accounts are priced. You know, there's a whole bunch of different dynamics there, which I think also impact you know, the way that you can earn revenue of this. I think there's also there's a long-term approach to investing in this, because you know, typically what you'll see with you know, kind of revenue share agreements, where you've got greater volume, you're able to negotiate better revenue share. And I think especially if you're kind of starting up, not getting too focused on that immediate short-term revenue boost, and more actually how do you set yourself up for success. And if you've got a product which is early in its life cycle, you know, having an embedded payments provider, for example, with a really strong brand might actually be something that's table stakes in your industry. And even if you can't get the revenue share that you'd hope to have in the future, just by having that, and another way to keep your customers sticky on your platform also brings indirect value, because it can help, you know, kind of boost your kind of SaaS fee as well. So I think it's all in the context of your business and your market. But I think every area of our business at Sage that I've analysed, and also kind of looking outwards into the market, pretty much every business has to get paid and has to make payments out. So there's huge opportunity in almost every sector.
Yeah, maybe to add also perspective, I think it's a very good point. I've seen anything from exactly what Gordon said, like people even offering it for free, just because the value of having like the retention boost, the usage and the data, right? The data could be a really interesting bit, especially in this age of AI, is enough that they don't necessarily want to make a margin. So they might just say like, I'll just, you know, resell you basically at cost, or even take the cost myself and offer it as a value add, all the way to, you know, embedding it in the software and also obfuscating the complexity. So instead of pricing per, you know, withdrawal and, you know, SEPA payments, you just say, look, it's going to be X more, you know, subscription per month. So I think it depends, you know, what you're achieving. And the other thing I wanted to say is it depends a little bit how comparable the product is to what they have. So if you go into something extremely comparable, so like a POS example, like Laura said, they would have reference of what they paid before, so you can't really probably depart too much from that. The more you go into I'm adding value because I have this data, I can give you financial insights, I can give you where you're standing against budget, I can give you you know, access to loans that you didn't have, I don't know, the more actually then there is, I think, appetite to pay for those services. So that's probably also another dimension.
And we have a question from the audience as well, which sort of links into that point, Gordon, you were making about, yeah, how embedded finance should look differently depending on the sort of type of business as well. So Blaine's asking, it says, yeah, the Uber example is interesting because the embedded finance piece is straightforward. You know, you want to ride, it will cost you this amount, and you prove payment for that, and that's pretty clean. But some of the examples cited in the panel, like the kind of plumber with the invoice payment or working with capital floats, I guess seems a lot less clean to him. What does embedded look like in that kind of working with those kind of businesses that still keep the decisions upfront and transparent for the user?
So I think I'll jump in on this one, because I think this is actually a really interesting question, because the rate of technological change, you know, continues to accelerate, and you know, we've seen all, you know, so many recent announcements. Every day I either read something or get pinged as a newer kind of agentic flows coming in. But I think when it comes to small and medium businesses, this is a really good point in terms of how much control are they willing to cede to the automation which sits in the background. And I think this is going to be something, clearly there'll be early adopters and there'll be laggards. But I don't think any of us know yet the answer about how fast that adoption is going to be and how long it'll take for there to be trust in the technology to kind of fully kind of cede that control. So I think we're going to see a blended world between agentic workflows driving this almost completely autonomously, and you'll set up a kind of threshold in terms of the level of control you want to give, but also actually having more assistants who will do a huge part of the workflow, but actually the human element where there's still a decision to be made. There's going to be a context there where some businesses actually won't want to see that control, because if you ever run a payroll, which I have before, having employees, it's a huge responsibility to make sure you pay them correctly. And, you can go from having a very trusted team who deliver that, who then, bring you the kind of payroll sheet to sign off, or in a kind of digital world. But actually that is I think there's going to be a period of adoption in terms of that trust of the approval, which will come in the market. And again, I think it's going to vary by industry about how comfortable people feeling and the scale of those transactions. But I think the one thing that we do know is, as soon as that comfort level lands, that there's a trust there, I think there's going to be a wave of adoption to go through that. But we mustn't discount the human element of the consequences of getting something wrong, which I think will be a big factor into how quickly the agentic flows come into play for vertical SaaS type businesses.
But maybe just also for clarity, I think there's a lot of beauty in having things in the same place, even without AI, right? And so also just wanted to say back maybe to the plumber example, the alternative would be going on the extranet of the bank, looking one by one, right? That's probably what most of the small business owners do, and look which payment has been done. Some of them are part payments, and what does it reconcile? So even, I guess, of course, like opportunity for automation is very large, but I think even before that, I think there's a lot of beauty in having just all your, if you could have like everything in the same place, the invoice, the staff, and the actual bank account and payments, you could imagine, I think it delivers a lot of value even without the agentic workflows. That's what I wanted to highlight.
And in fact, sorry, I could just jump back in and add, because I think it's a really important point. So I give a real world example. There's a very good friend of mine, independent kind of gas safe engineer here in the UK. So every year he comes and services the boiler in my house. He's got an application that helps run his business. So he takes his bookings on that. So for me to book in, I have to put a request, and it's on there. So he knows, right, on Wednesday morning, I'm going to Gordon's house to go and do this service. In there, he can order new boilers. He can order parts that get delivered to his workshop. He can take his payments on there, but also because the industry is in, that app allows him to send the gas safe certificate, which I need every year, to prove that my boiler is kind of is worthy and is going to keep my family safe. And that example shows me the beauty of a very small business. He's a sole proprietor, sole trader. He's got everything he needs to run his business in that single application. And that then allows him to spend so much time, because he can fit in probably another 2 services in the day versus the admin he used to do. So there's real world examples already out there in vertical SaaS where this is working in changing the way that small businesses do things. And I think there's huge potential for the industries and vendors who haven't already tried to contain. And yeah, like we said, it is payments within there, but there's also other elements. Bringing that all together is how you can really build a successful kind of vertical SaaS business.
And for companies that are, say, interested in embedded finance but aren't sure where to start, what would you say are like the easiest, almost straightforward features for a company to implement first?
I would always start with the payment side of things. So you've got to onboard these people to take payments into your software. So from if you can get the onboarding right and you get that effectively, what we call them connected accounts, but effectively the merchant into your platform, they've KYC, they're able to acquire. They can send, in the plumber example, we'll go keep with it, they're able to send an invoice once they've done your job, or they could turn their phone into a payment device and take a tap to pay payment while they're there in your premises. All of that is doing everything to speed up payment and increase the speed in which they get paid for the services that they've delivered. You can then use that same KYC information that you already obtain on that person to then be able to offer them additional financial services. You would probably start in the small to medium enterprise sort of space and micro merchant space. You'd probably start with capital from a lending perspective, thinking about the fact that cash flow is a challenge for those particular users. So you would probably, if you've got the data on their payments, you know when they have cash flow issues, you know what information they're receiving into their accounts and what payments they're taking. So therefore you can see what you would be able to lend to them, which then kind of completes that circle, and being able to access and offer loans that the bank perhaps don't see that full information that you're seeing as their software provider. So that makes that piece a bit smoother. We talk about like a flywheel in terms of the embedded finance process, which starting with acquisition, so acquiring, you would then lend, then you might consider holding funds, and how you might then get some kind of effectively a bank account and yield on what you're holding for your user, and then perhaps an issued card which would enable them to spend. So you've got acquire, lend, hold and spend as your kind of complete flywheel for that financial services offer.
And I guess, like, you know, obviously Stripe works with companies varying from sort of startups to large enterprises. What are the different challenges of embedding finance with a kind of smaller, earlier stage company versus a larger, more mature company?
I think in terms of smaller, earlier stage companies, the main challenge is limited resources and the need for speed to market. So they often lack maybe technical expertise or dedicated teams to build complex financial solutions. So for these businesses, kind of the no-code, low-code solutions would be ideal. Hosted interfaces that we've discussed already, pre-built embedded components. They don't have to have a team of 20 engineers to build something out. So that's also useful. You can go live with things in minutes, not days. And then for the more mature, larger companies, challenges often revolve around integrating into existing systems and scaling globally. So they would require more customizable, white labeled solutions, and that would offer an API first kind of approach, and full control over that experience of what they want to, how they want to present things to their customers.
Lucy, I see you nodding along.
Yeah, I was thinking the one is the pricing packaging topic we talked about earlier. I think that's a big one and hard to get right. And I would always advise to be iterative and try things, because every company is different. So you won't know. I think the other one is just generally go to market, because I think, as Laura said, I think actually the embedded finance providers do a pretty good job of taking away a lot of the tech complexity, and they have a lot of expertise in helping customers go live. So I do feel that this part actually could go well. I think the go-to-market, you still need, as a software business, you'll have to take the lead on that. And so how do you position it? Why should your customers, open a bank account with you, in short, right? Or open payments with you? And how you're gonna call it, how you're gonna position it. Do you only do it for new accounts? Do you go back and try to upsell your existing customers? I think that's an important piece that I wouldn't say challenging, but takes thinking.
I guess it's the priority of what else you've got going on in your business, in terms of how do I find the time to think about these things. We've got a partner marketing team that have built out verified partner resources, so things like training resources to understand the payments market, things like campaigns in a box, where you can just take a marketing resource and basically be able to sell that through to your customers. Because I think the awareness of what you're offering and how you educate your customers about the resources and products that you now have available if you go down this route is actually quite an important feature as well. So your sales team are used to selling the leisure platform that you have in terms of booking the trampolining park, but they may not necessarily know how to then sell payments on top of that. So having those education resources and bringing your team up to speed with what you're...
Yeah, there's a very good point that your sales team that has been selling software for 20 years suddenly gets financial services questions, which is very different. One insight I can offer is, interestingly enough, I've seen a lot of companies making it mandatory to their new customers, precisely because actually it's hard to explain. And so also because the uplift in revenue was so dramatic for them. But I've seen a lot of companies just say, going forward, it's just going to be part of it. Basically, payments is part of our proposition, and in a way removes some of the complexity of explaining why people should upsell, into it, and saying basically the only value you're going to get the only way you're going to get best value of our software is if you take the payments.
Some businesses surcharge the other businesses they don't want to prioritize anymore. So right, if you want me to embed something that you have yourself rather than using my solution, I'll surcharge you for doing so, because the upkeep of multiple providers is expensive.
And on the subject of fees as well, we have another audience question from Katie Babbitt. She's asking, which models have proven most sustainable? Revenue share, transaction fees, white label, and where do margins usually get squeezed?
For me, that would depend on what your end customers' expectations are. So the SMB market, obviously they have less buying power within be able to go and negotiate prices themselves, and therefore they would come into a solution and accept your price point, and therefore revenue share tends to work quite well for that. If you've got a large enterprise user who is used to a very, very low price point, there isn't much more to share on that. So I think it depends on kind of how your business is structured, who your end users are, and how, I guess, also how skilled your team are at understanding that the complexity of those payments pieces as well.
Well, and maybe what are you replacing? I think back to what we were saying earlier, like I think if it's pure payment processing, it's probably relatively hard to add margin or explain why you should charge more than what they used to. In the case of SMB banking, people typically pay quite a lot of money, especially in aggregate, if you look at all the different fees bank might charge you. And so, you know, that makes for a very different comparison. So yeah, I would always triangulate, like, what do they pay already for that type of services? And if you're going to go above, like, do you add value compared to that?
I think just to add in, so obviously it's already been shared. I think there's so much context depending what market you're in and what kind of customers you've already got. But I think one of the things that is very important for the sustainable element of regardless of the approach, is around the trust with the customer. So whenever we're asking a customer to change the way that money moves around, especially if it works for them today, then being able to trust a process is really important. And I think it comes back slightly to the previous question in terms of, okay, where do you start? Well, actually, if you can help a business get more money into its business quicker, help with late payments, whatever it might be, that's the kind of thing that builds trust. If you kind of jump straight in with, hey, we're going to help you borrow money, you have to really build that brand up. And I think over a period of time, the way that you approach that, whether it's as a white labeled solution or kind of partnered, it's the time and effort you have to put in. If anyone expects immediate results a month into doing this, then they've got the wrong approach. These are long-term strategies which take time to build, because when a customer's got that trust with you, they're more likely to consume many of these services which impact their business in a big way.
And on the subject of trust as well, compliance, regulation and trust, obviously, major concerns, right, when it comes to embedded finance. What would you say are the best practices for navigating regulation to ensure compliance?
From a Stripe perspective, we try and abstract as much of that way as possible. So being able to onboard your users and use hosted services that we're checking records and other aspects at the back end, and we've got teams doing that. We've got, I guess, our radar tools are looking at merchant risk, transaction risk, and kind of evaluating that. You want to know who your customer is and know that they are the person they are behind the keyboard, and not a bad actor in that sense. So there's obviously I think trust from the end customer to the software business, but also the software business to that merchant and that end customer, who they are onboarding and how do they know who they are. Things like identity solutions, where you would selfie check who somebody is, but establishing that relationship with them and understanding their behaviors, knowing that they are legitimate, and therefore not offering an instant payout within the first day of transacting, so they can, if it wasn't them and you've offered something like that, there's obviously risks around that. So number of days of transacting prior to offering additional solutions. You'd need that back record of acquiring and transaction history to be able to offer capital. So there's a time lag within that particular approach as well. So I think just, I guess there's a sales sold versus a self sign up piece within there as well, and who is the customer that you're attracting at the end, and that plays a very big part in what you might then offer them if they were self sign up and you don't know who they are and they've just browsed the web and found you, versus you've got a relationship with them and you've been working with them in 2 years and your sales team know them very well. there's quite different approaches that you would take for both of those use cases.
Lucile and Gordon,
I
anything
can
else?
add to that. I think it's an interesting learning curve, because that's probably the only moment where the software business and the embedded finance might not be fully aligned. And by virtue of effectively taking the compliance and regulatory risk away, the embedded finance providers also can choose and should choose who do they work with. And that's where sometimes there's an interesting learning curve that if you work with an embedded finance provider, it doesn't mean that they'll accept all your customers, right? And so, or that, they'll open the bank account like in 2 hours. And that's where I think it's a learning curve for software businesses, because, then you get into conversation like, oh, but I didn't realize like 10% of my base wouldn't be able to be accepted. And that's a healthy tension, because the software business will want the product to be available as quickly and as openly to his customer base, where obviously the embedded finance provider, he's the one carrying the license and the compliance risk, so to say, and his objective is obviously to stay within the limits and so on. I would say that from my experience, working with Swan and of course companies like Stripe, they're very best in class when it comes to fraud and KYB. So I would certainly think they try as much as they can to make business work, but there will be times where they'll want more information on your customers. So that's a point of friction that is just healthy to recognize, where it's still financial services products, right? So you can't get around the fact that you'll have to KYB people. Sometimes you have to put limits, or you might say there's a few I don't know, like there's a type of your customers that just can't serve, right? It's just the nature of the beast.
And I think that this comes back a lot to what we were talking earlier about choosing the right partner and actually not rushing into that decision, because I think understanding the kind of background and history of how companies have operated in this space, the length of time they've been doing it, and it's not that you shouldn't choose new incumbents who come in, but there's real value in doing that due diligence up front to make sure there's real trust with, if you're partnering with a brand like Stripe, for example, you can see the history and how they operate in the market and the different entities they're involved with. We have the same in accounting and financial management. There's a huge amount of compliance. And for us as a company, we've been working for 44 years with tax authorities in various different countries. Like, we've been doing this a long time and kind of know what we're doing. I think there's looking at the provider that you find to make sure there's that trust and how they operate in the background is extremely important before you kind of jump in with 2 feet, because the consequences of getting that decision wrong can be absolutely catastrophic. So yes, there is huge revenue opportunity had here, but there's risk associated with that. There's nothing comes for free. So I think for me, it's all about the effort you put in up front to do that due diligence will kind of be backed into the rewards that you get with that, a trusted partner who can be certain will deliver on that regulation for you.
And what other ways can you kind of future-proof your embedded finance offering with, I guess, aside from the kind of regulatory piece? Like what can you do to make sure that it stays relevant, even considering how fast customer expectations change and technologies change as well?
I think it's just staying close to your customer and really understanding what their needs are and what their pain points are. So if you know what they are, then you know what you're solving for, and don't forget to keep them at the heart of what you're doing. From my perspective.
Well, in a weird way, maybe it's a VC quirk, but we spend a lot of time thinking about the future of SaaS, and you hear those headlines like, is SaaS dead, and which I think are a bit exaggerated, but there are a lot of questions around if everything is agentic, like will we have UIs, so in a funny way, financial flows are not going anywhere, right? So I would think as a software business, if anything, I think probably embedding finance probably makes you more resilient, because and I'm pushing the extreme just for this, but if you assume some of these things will disappear because they might just happen in the background, or they might just be abstracted in APIs and MCP, so you don't need a front end. The good news is, people will have to get paid. The money flows, and I think a lot of the regulation, like a lot of these things, are not going anywhere for probably a couple of decades. So again, I think as a software business, I think if anything, I think that makes you probably more resilient than less, because your surface area is bigger vis-a-vis your customers.
Yeah, I think to add to that, you know, the resilience piece, I think there's a first element around making sure you're always looking to the next phase. So, you know, if you're looking for sustainability and you kind of start with payments, just focusing on payments isn't probably the thing that gives you that sustainable revenue. It's okay thinking about, yeah, how does that then link into to lending or foreign exchange or whatever else it might be in that kind of workflow. I think secondly, it's also slightly to Lucile's point, it's like thinking about the things that aren't going to change. So there's certain things, yes, there's, you know, huge advancements in technology that are driving things forward, but actually there's elements of the way businesses are going to operate that aren't going to change. And that's going to be very important to sustainability for, you know, even outside of embedded finance, how providers are able to, you know, maintain those pieces. So not looking to the change is the sole place that you can drive value, but actually those things that aren't going to change for businesses.
And I guess beyond payments, yeah, which next layer do you think will matter the most in the next 12 to 24 months, and why? You know, for example, it could be embedded lending, wallets of store value, payouts, money movement, or even maybe embedded compliance, just to give a few ideas. But yeah, curious to hear what you guys think too.
So I think the lending perspective, I think, is going to be very interesting. As I was saying earlier, you know, there is this squeezed kind of middle of businesses who are really kind of struggling to drive the investment that they need to kind of grow their businesses. And I think that's going to become more and more prominent. There's, you know, a lot of instability in the world right now, and I don't think that's going anywhere anytime soon. And, you know, instability from a financial markets point of view obviously always kind of moves the risk dial. And I think that the ability for small businesses to find access to funds to drive their business forward is a really big opportunity, and one that, you know, ourselves at Sage are looking to really support businesses through in these kind of times of ongoing uncertainty.
Lucile or Laura?
Yeah, investing with the same thread, I think investing is really interesting. I think we've lived in a decade of almost zero interest rates. I think now you see a lot of these consumer propositions with high interest rates, and there's no reason if you're a small business you wouldn't also benefit from that. I do think a lot of these small business owners don't have the time, energy, knowledge to open an account and look at what's the best rate. But again, if you offer it in a simple way, like, you know, if you put all your, you know, your treasury in the same place and get, you know, 4% interest, I think some of these things can be very meaningful. And it's becoming, and that's more frontier, but it's these things are becoming more and more available. And you know, you can imagine then, you know, accessing ETFs and other investment products for maybe bigger SMEs. So I think that's a huge opportunity that hasn't really been explored, where a lot of these treasury and cash has been sitting idle, frankly, because for the last decade it didn't make a difference. Now that it does, it might change things.
I think there's a lot to be said there about knitting all these together. So looking at that SME kind of audience, and how, if their cash flow is a challenge, how do you knit a treasury account with an issued card and other aspects. So I think as perhaps the more mature players in the SaaS space who have been doing some of the lending and issuing previously, how do they increase their solutions to include that treasury aspect and allow money movement for bill payments and money in and money out, and that movement of money across not only in the UK market or EMEA market, but also globally, and how we start to then look at money movement globally as well. I think it will be an exciting time.
I think the other thing to think about in respect to this as well is that you know, small business owners aren't always looking for the best deal. They're often looking for the easiest deal. And it comes back to what I was speaking about before. You know, they're there to run their business, right? And these other processes often can be a hassle. And if you can make a process for them easier, give them a bit of a painkiller, businesses are willing to pay for that. If it's going to take a usual lending route, for example, you know, I make it up 10 hours to go and of investment to go and get the decision to then get some lending, but actually through your platform you can reduce that to 2 hours. That's 8 hours that business owners got to do with something else. And I know this on a personal level. So I've got a very small payroll that my wife and I run, and the payroll provider who we use for this particular sector, which is actually an embedded payroll. There's several kind of things they've upsold me because it saves me so much time. It's a genuine time savers of things that if I need to go and get insurance for the colleagues who I pay. Actually, if I can do that through my platform, it probably maybe costs me an extra £100 a year, but I pay that because of the time that it saves, because I've also got an executive job that I'm doing and, plenty of other things, 2 kids to kind of run around after. It's worth the investment. So I think the key thing to remember is just because it's often the ease of a process can outweigh the, what it might cost. And I think for vertical SaaS providers, that's an important element to remember about our customers.
And we're coming up towards the end of our panel with 5 minutes to go. I wanted to wrap things up with a quick piece of advice from each of you. So yeah, I guess many of the people in our audience, there might be companies that are beginning to sort of explore the embedded finance space. What's one piece of advice or key insight would you give them? It could be a do, a don't, a lesson learned, success factor, something that you would change in your own kind of journey. Anything like that. Gordon, would you want to start there?
Yeah, absolutely. I think the journey that we've been on at Sage and I've been on is the most important thing is to make sure you do your homework up front and really understand what you're getting into. So, we've talked today a lot about the opportunity, but investing that time up front to make sure you understand these processes, even in a light way, will go a long way to you making the right decisions as you go forward, and then ultimately helping kind of serve your customers. So anyone who's thinking of getting into this space, spend a bit of time doing the research and you'll get that back tenfold in terms of decisions you're able to make for you and your end customers.
Laura, do you want to go next?
Yeah, I think for myself, it would be think about what your goals are now and what they might be in 5 years' time, and have a think about where you're starting from, and then come and talk to people, ask around, find out. There's lots of gotchas in terms of uncovering lots of different bits, but have a conversation, read some blog posts, kind of get the ins and outs, look at the case studies of what other people are doing, and just really get a feel for kind of where this could go for your particular industry.
And Lucile, just before I get to you, there should be a feedback poll that should be appearing on your screen now. Oh, amazing. It is appearing now. And yeah, please, if you could fill that out within the last minutes, that'd be really, really great. Right, Lucile, back to you.
Yeah, I would say just 2 quick advice. I think back to also what Laura was saying, find someone that has done it and get their feedback. And number 2, go simple and iterative. I think it's also easy to get bogged down into making it a huge, huge thing. And the best way is just do it. Just get started and then build on it, because that's the best way.
Amazing. Right, thanks so much, guys. Yeah, thank you to everyone in our audience for joining us. Yeah, please fill out the feedback poll when you have a moment. I apologize if I couldn't get to your question in the end. But yeah, thank you so much to our amazing panelists, Gordon, Lucile, and Laura, for sharing their experience and expertise with us. Yeah, I really appreciate all the insights and taking the time to speak with us as well. If you're hungry for more Sifted Talks, you can visit sifted.eu/talks for more info. There should also be a link in the chat as well. Yeah, we'd love to have you join us again. But until then, it's goodbye for now. Thank you so much.